Welcome back, traders. In this video, we will be speaking about order blocks. First of all, order blocks is not my teaching. I'm not sure who originated it from, but it's found everywhere on YouTube and on Google and wherever. So I'm just going to share with you my understanding of order blocks and how I use them. So it's not something new that I invented or anything. So I take no credit for any order block teaching. I'm just showing you how I understand it and how we use it in our trading. And it's a tool that we use to get entry points and reversal points, or where price can reach into before continuing in the opposite direction. So this is just a simple way of explaining it. Basically, how I understand it is that an order block, a bullish order block, is found when we have a bearish candle followed by a strong bullish candle, and this bullish candle covers this bearish candle. So you might think, okay, this is an engulfing candle. Well, yes, depending on where this pattern forms, it can look like an engulfing candle, but you won't always see it like this. The main point that I want to stress here is that the bullish candle covers the range of the down candle. So we have a down candle, then an up candle. That is where our order block will be. Same with the bearish order block. We have an up candle followed by a down candle. So this can be a doji, this can be a small candle, a big candle, and then this candle doesn't even need to be a strong candle. It's basically just a down candle that covers the range of the up candle. So bearish order block, down candle covering the up candle, bullish order block, up candle covering the down candle. So that is the basics of it. Okay, let's look at some examples. Okay, here we have an example of a bullish order block. Let me just zoom in a bit. We have the down candle over there, followed by two up candles covering the range of that candle. So that is our order block. This is our order block. Now we can see how price pushes up above it. We have this area of structure. Price breaking the structure, comes back, and then comes back to retest the order block. And then again we have a push away, we have a bit of a consolidation, and then price comes back again one last time, retouches that area, and then pushes to the upside. Now, remember we spoke about the wick zone and how they align with each other. This is, remember our wick zone, I think this was also in the examples earlier. This is our wick zone. Let's just make it in a different color. No, not that color. Maybe it's something like this. Yes, that's better. Again, remember we spoke about the wick zone where we have wicks from the bottom, and from the top, and you see how the wick zone aligns with the order block. So in the zone where they both align, we have the highest probability of finding an entry. So we have the order block and we have the wick zone both aligning, and we can see how price reacts from that area. Here we have another example. We have a doji or spinning top, small candle, whatever, doesn't really matter to me, and we have price breaking above it, coming back to retest that area, and then continuation to the upside. And again, we can also identify a wick zone over here, something like this. Nothing to the left, but we can see price coming back, and then as price breaks it, comes back to retest our wick zone, and then we have a continuation to the downside. Here we have another example of a order block, bullish order block. We have the down candle, this black candle, and then we have the up movement. So that is our order block, bullish order block. And we can see price coming back to retest this order block, retest it again, and then we have a push to the upsides. Here we had another example. This was this week in GU. There is our bearish order block. We see price trading up, the blue candle, and then after the up movement, we have this strong movement to the downside, creating that order block. And just want to show again, we have the wicks from the top and the bottom, and you see it aligns with that order block. And then again, price pushes to the downside, and again we have this order block created over here. I ignore this wick because the majority of what I'm looking at is in the body and the top wick in this area. Sorry, I'm just messing up here. I'm looking at that area, and we can see how price bounces between this order block and comes back to this order block and respects this order block. And then again on the lower time frames, let's just go to the 15-minute. They happen on all time frames. Just want to show you as an example of a smaller one. This was a great example. So first of all, we have our wick zone over here like this. We have this one as well, but we have this one from the top, price coming back into it. But again, we also have an order block. So we have this order block over here, and we can see price breaking that candle, breaking that range. We have the up candle, and then we have this down candle, and then we have the structure, price breaking the structure. So you can also do a line like this and see, okay, price broke the structure, and now it came back to retest the order block, the wick zone, and we had this nice sell-off to the downside, breaking all of the structure to the left, indicating more selling pressure. And just we have wicks over here. So let's see, we have our wick zone again, and you see how we create that zone as we go along, and price coming back to reject that wick zone again before continuation to the downside. Continuation, and then yes, all the way through we have this massive fake out to the upside. London Open manipulation, we know that happens, that is around London Open exactly at 10 o'clock, and then price comes back, rejects and respects the wick zone, and then we see another nice push to the downside into the order block over here, because there we have the down candle before the up candle. So take profit over here, and we created this new consolidation level over here. And you see we have this wick zone up here as well, exactly like this, the zone over here. We have the wicks to the left, at the top, from the bottom, price breaks through it, comes back to retest it, but fails to go higher, breaks through it again. What do we need after a breakout? We want to see the retest first, and that is exactly what price does. It comes back all the way to retest this level, and then we see another push to the downside. And just to show you again, we had again this area. Must remember to make this green. And we have price rejecting those rejection wicks, coming back towards that wick zone, and this is where we are presently. So it will be interesting to see what happens next week. So that in short is the combination of order blocks and wick zones. I hope it makes sense to you, and if you need more information on order blocks, you're welcome to go Google it. There's a lot of information out there on order blocks, and this is just a quick example of how we use order blocks. Just to end off this lesson, I want to show you an example of a trade that was taken from an order block. So we had this order block. I'm going to break down this trade now for us. We have this order block. Let's just color code it correctly. Let's just remove everything that we have, and then we have a clean canvas. So we have our order block over there. We have our Asian range consolidation over here, consolidation, and then we have our, this was around Frankfurt Open, just before Frankfurt Open. Price pushed all the way into this order block. We have this order block over here. Price pushed into this order block. That is a great place to look for longs then. And that is then where price, we can also see, do we have a wick zone in here? Let's see, in the middle, let's just make it green. Okay, so we have the wicks from the bottom, wicks from the bottom, wicks from the bottom, from the top, from the bottom, a little bit of bodies, and then we have this wick as well, this wick into that zone. So we have the wick zone as well as added confluence to look for longs. So I entered the buy limit as price reached into this level, stop loss below the zone or below that wick, and then take profit at the previous wick zone area over there. And that was the trade. So we have the consolidation, we have our Asian range, we have the order block, we have price manipulating into that area before London open, Frankfurt open, and then price push all the way up into the previous zone that we have at the top. So it is it's a form of zone to zone trading, but with a lot of added bells and whistles in between to give it some flesh and to give us some more understanding of why we are doing this. It's all about context. We're getting context behind the trade setup and why we take this trade setup. So that's it for this video. Hope you found it insightful and that you will go to your charts and taste it out, combine the wick zones with order blocks, and then see what happens. Good day, and then see you next time.